Across the country, developers and investors are paying a lot of attention to the D.C. area, and for good reason. But there's one other major East Coast market that has performed just about as well, and that's Boston. Beantown is booming. Welcome to Apartment Market Dynamics from NPF Research. I'm Jay Parsons with your Boston Update. Boston led the nation with 30,000 jobs added in the year ending August 2010, and that job growth has undoubtedly helped the apartment market. Overall occupancy in Boston is now at 96.5%, one of the best rates in the country. That is up 1 point in the third quarter and 2.6 points in the year ending September. That puts occupancy in Boston above the rates seen even prior to the recession in 2007. And this has come in part because new apartment properties in Boston have leased up extraordinarily well. And looking at rental rates, Boston's a market that didn't really push up rents much for most of the 2000s, but that is beginning to change. Same-store rental rates jumped 1.9% in third quarter, and they are up 4% in the year ending September. And we are seeing particularly strong rent growth in the top end of the market. Apartments built since 2000 have increased same-store rates 6.9% year over year. Now let's take a look at some of Boston's submarkets. Every submarket has seen revenue growth of at least 4% in the past year, and occupancy tops 95% in every submarket. And this is a little bit of a change even from last quarter when we still had a couple of submarkets lagging behind. The strongest growth has come in the urban core. Starting with the in-town Boston submarket, occupancy there is at 98.1%, the best in the metro. That is up 4.4 points annually, and effective rental rates jumped 5.4% year over year. And in the Cambridge University area, same-store rents are up 5%, occupancy is up 3 points, and the overall occupancy rate now stands at 97.3%. And taking a look at one submarket outside of the urban core that's also done very well, let's look at the Interstate 93 corridor. Same-store rents jumped 4.5% annually, while occupancy improved 3.4 points to land at a rate of 96.2%. And here are some other key Boston submarkets to show you. They're ranked by annual revenue change, which is the combination of same-store rent change plus occupancy change in the year ending September. You see the North Shore Route 1 area and Quincy south of Boston leading the way with revenues up more than 6%. That falls into that second tier of submarkets after the urban core and the Interstate 93 corridor. And even at the bottom of this list, New Hampshire and the Marlboro-Framingham area still have revenue growth of more than 4%, very strong. And you see the lowest occupancy rate at 95.5% in Marlboro-Framingham area. Again, very good rate, even though it's the lowest in the region. And for the Boston Metro overall, as I mentioned earlier, this is a market that didn't see very significant rent growth throughout much of the 2000s, but that has begun to change, and we expect that to continue to be the case next year. Look for Boston to be among the nation's leaders in rent growth in 2011. And that wraps us up for Boston. So until next time, for NPF Research and Apartment Market Dynamics, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.